Welcome to the monthly market review. With me this month is Paula Wieck, portfolio manager and director of research.
Hi.
How's it going, Paula?
Good. How are you?
Great.
Yeah, so it's been a crazy start for the year in the markets. I mean, the first quarter was a roller coaster. Everything that worked in the first half didn't work in the second half, and vice versa.
Yeah.
What are you seeing so far?
It always seems crazy in real time, doesn't it?
It does.
But you know what? I would actually say that, studying a lot of historical precedents, that so far this year, and by the way, we are recording this shortly before month end, so who knows, something crazy could happen the last final days. But
Right.
but really, it really hasn't been that crazy if you think about it. I mean, one, we have a lot of volatility. The market's only slightly higher at this point. That is somewhat consistent with the presidential cycle and presidential election year. So it's that's normal. Another thing is we are now in a rising rate environment, and in the rising rate environment, and that can be defined a lot of different ways. I'm defining it as Federal Reserve policy. They've raised short-term rates. And something that's exceptional is that a lot of people said like emerging market equities will do poorly in a rising rate environment, but emerging market equities is one of the best performing areas since the Fed raised rates. So I think a lot of these things that seem exceptional really aren't exceptional.
Absolutely. Emerging markets has been one of the best performing asset classes since right around February 11th. I
And
think
obviously it's helped our portfolios
helped
quite
our
a bit.
definitely, tremendously.
Hey, one of the things about rising rates is, of course, is something that we've been doing in the portfolios. One of our emerging markets has been one of our biggest tilts in the portfolio. Another one has been our really big underweight in financials, which has helped us. But they've been beaten up a little bit this year, and that is one area that we've been starting to nibble on, and we're starting to move towards a market weight. So it's kind of nuanced when you say that we have less exposure to it. But anyway, that's been one of the big movements as well.
Absolutely.
Yeah.
Switching gears, I know that in your commentary this month, you talk about the 4 Ps, 3 hats, 2 assembly lines, and then 1 mission.
Yep.
Do you want to go a little bit into the 4 Ps?
This has come back, a question that I get a fair amount is, what is the role of a chief investment officer? And there's different ways I've attacked it. I guess the first way is the 4 Ps. And so what am I responsible for? The first P is the investment personnel, the people, our investment team. I mean, we are a team, and we are built for performance, and I have to make sure the team is functioning at a high level. The second thing is the philosophy. What do we believe about the markets? What do we believe about how we manage portfolios? Of course, risk budgeting is the way what we strongly believe in. The next is process. How do we pick securities? How do we build portfolios? How we manage risk? And the last one is performance. And performance, I'm ultimately accountable for all the strategies and the portfolios. It isn't just about that number, but it's also about making sure that everybody understands how our portfolio should behave. And if somebody, if a portfolio does not behave as people expected, that means I must have done something wrong describing philosophy or the process or whatever. Those are the 4 Ps.
Absolutely.
Yeah.
What about the 3 hats?
3 hats. Now, I talk a lot more about this in the commentary this month. So the 3 hats are really, there's sort of 3 different hats that I have to wear, and sometimes they can clash a little bit with each other. But the first hat is as an investment manager, that is producing a rate of return, managing a portfolio. The second one is the hat of an investment counselor, and that is managing investor emotions. And so either doing that directly or indirectly. And the third hat, of course, is managing an investment management firm. And so those are 3 different important hats, and read the commentary for more on that.
Yes, absolutely. I think it's funny that so many people think we probably just sit behind a computer all day and just look at numbers, but we do so much more, crafting stories, being able to relay that message to an investor that could possibly be very emotional about their portfolio.
Absolutely.
And so all that takes more of an art form, really.
Yeah.
So.
Well, that gets me to my 2 assembly lines.
2 assembly lines.
And that is so true, because first assembly line is, again, manufacturing that rate of return. It's very technical, it's numbers, it's managing that portfolio. But and really it's about efficient production, it's about quality control. But it's also manufacturing a story, a narrative to what we're doing with the portfolios and helping with investment counseling. And it could be argued that second assembly line is more important than the first. I mean, the first is about beating a benchmark, but really the goal is it's individualized for each investor. And a lot of times that communication, that education is the important thing.
Absolutely, because through that communication, that is going to make an investor feel comfortable and stay the course, essentially. So, and that's definitely
well said, yeah, exactly.
definitely the most important thing.
Right.
So go ahead and what's the mission? The
So
one
our mission, of course, to bring it all together. What is this all about? And it's helping investors reach their goals. It's closing that behavior gap where they're staying on course, staying balanced, and of course we do that by empowering advisors by everything that we do. So there it is.
It's great commentary, Rusty.
Thanks. Thank you. And thank you for watching the Monthly Market Review. We will see you next month. Thank you.